I'll come to you first, just on a very quick technical check and how you would play this. Would you buy at this juncture, go long, or would you hold your horses considering everything that's happening? Of course, we're reacting to what's happening overseas as well. Risk on seems to be the mood.
Yes, good morning. Good morning to all the viewers. Firstly, market is holding ground. Yes, Bank Nifty is underperforming. Despite that, Nifty index is performing pretty well. So, from where I see it, that the markets are likely to test 24,800 mark going forward. So, till the point 24,200 is held, we will suggest short-term traders to look for buying opportunities. And there are some bit of good buying opportunities being witnessed every now and then. So yes, overall we are keeping our view on the buy side, still maintaining a cautious view considering the ongoing rift between India with the bordering nation, and it can just drop up anytime and no one would get a clue of it. So what we are trying to say is our stop loss is 24,200 and we are long with it, looking for targets close to 24,800 in the near term.
That's the view with regards to where technicals are concerned for the Nifty 50. Let's dig in and start with the first query. Satyan is writing in and he has ITD Cementation at an average price of 120. He's been a long-term investor in this counter and he says that this is a part of his core portfolio. Wants to know as to what is the fundamental view for this and wants to know the target if possible for the next 24 to 30 odd months. Mahesh, a very good morning to you. I'll come to you on this one. What's the view like for ITD Cementation?
Good morning. So I think he can hold further from a 12-month to 18-month horizon. I think upside could be 580 to 600 plus level could become in ITD Cement. So from my perspective, he can hold further.
Okay, so that's the view like for ITD Cementation where fundamentals are concerned, of course. Our next caller, Suresh, is calling in from Hyderabad. Suresh, a very good morning to you. How can we help you?
Hi, very good morning. Just wanted to know, Praj Industries fall from its previous high to 50%. So, for long-term outlook, is it right time to take an entry in Praj Industries for 1 to 2 years?
Okay.
Both technical and fundamental. Entry point which I need, and can we take an entry on that?
Okay, got your point, Suresh. I'll take this up with Gaurav. Gaurav, do you think the charts are attractive enough right now to make an entry in Praj Industries?
Little risky as of now, because the stock has been beaten down too much, lot more than what it was expected, currently trading below its important support levels. So it is better to wait for some time, let the stock consolidate around these levels and surpass 500 mark. Then I think it will be a better opportunity to look for some kind of a buy position for a medium or even a long term perspective.
All right. So that's the view on Praj Industries. By the way, since it was mentioned, I think we should address it as well. The earnings came through not too long back, and I think the stock reacted negatively, very sharply so, to the Q4 numbers. So, Mahesh, if you have coverage, what did you make of the numbers, and would you hold your horses or would you deploy based on the fundamentals?
From Praj perspective, we are optimistic in buying in lower level. I think a 425 to 440 range could be a good buy from a Praj perspective. I think we are not looking for a 1 or 2 quarter, but yes, we are optimistic for some upside. That could be a 570 to 575 range. So in lower 425 to 445 range is I think attractive level to buy.
So no, but not for the next quarter or two. Bear that in mind, Suresh, when you're thinking about the fundamentals. And in any case, I think you pointed out that you have a 1 to 2 year time horizon, so that should be fine. Medi Assist is the name of the counter that we're talking about next, and this is a question from Siddharth, who's writing in from Kolkata. He's in a loss, but not a very substantial one. He's bought at levels of 468. The stock is currently at 437. He's got a quantity of 95. He's got a long-term outlook, and he's wondering whether this is a stock to hold for the long term or should he switch to another one? Mahesh, on the fundamentals, what's your opinion?
I think he should switch the same because we are not covering much, but stock is not looking good from a longer term perspective. I think he can switch in another stocks like Apollo Hospital and other things. So where they can make at least some money.
So that's the view with regards to where Medi Assist stands. Our next question is on Bajaj Finance. Vivek Pratap from Delhi is writing in. He's holding 750 shares of Bajaj Finance, bought at 4,200. 2 to 3 years back is when he bought it. And he's a long-term investor and he wants to know as to what should be the outlook for this particular counter. He's sitting on a significant profit of 36 lakhs rupees right now. Mahesh, I'll again come to you on this particular counter. What's the view like? The company did come out with its earnings in terms of brokerages. They did downgrade the counter. The earnings in terms of the overall earnings was a thumbs down because there was a negative bias on the numbers, and the commentary coming in was also not very attractive. FY26 guidance, if I'm not wrong, was cut by the company. And there was also a bonus plus stock split. Lots happening with the counter. What's the view like?
I think 50% profit could be booked here and the rest can be hold for a longer term perspective, because you're not looking much more upside, but yes, 9,700, 9,800 could be a level where I think stock could be capped. But yes, 50% profit could be a booking is a good idea from in these levels.
Let's go to our next caller. We've got KS Babu who's calling us from Visakhapatnam. Hi, Mr. Babu. Thanks so much for calling us. How can we help you today? Mr. Babu, can you hear me? Okay, just as we were going to listen to Mr. Babu, he's lost the line, but let me go ahead and take his question in any case. He's got Cochin Shipyard, a stock that has been in focus in the recent past, bought at levels of 2,597, and he's still in a loss because he's bought at very elevated levels. I don't know what his time horizon is. He could have told me that, but then on the charts, let me go across to Gaurav on what he makes of Cochin Shipyard and the recent move and the run up. Should he hold on? Elevated levels, as I pointed out, 2597.
It's better to hold Cochin Shipyard. It is a good stock. Things are in favorable. I think the ongoing, the war type of situation is a blessing in disguise for the defense sector. And Cochin Shipyard is one of the major suppliers of maritime to the Indian Navy. So it is better to hold on considering the higher levels. So I think it should be at least 1 to 1.5 years of journey that the viewer will have to hold, give it some time, and it will perform.
Okay, so that's the view with regards to where technicals stand for Cochin Shipyard. We have two questions coming in on EaseMyTrip. The first question is from Mahendra Raj, who's writing in from Jaipur. He's purchased 5,100 shares, bought at 13 rupees a piece. Is that correct? Yes. And he needs an advice from a longer term perspective. The second question is also with regards to where EaseMyTrip stands. And since this is a long-term question, Mahesh, I'll come to you. Any view with regards to EaseMyTrip?
I think he can hold further from a longer-term perspective. I think some upside could be come in stocks like 16 to 70 level could come in stocks. But yes, stick stop loss near 10.50 rupees and try to hold.
Quickly, Gaurav, your view with respect to where technicals are concerned, because Ajit bought at the levels of 21 rupees, so he is also sitting on a significant loss right now. What's the view like? Should they continue to hold EaseMyTrip?
The stock is not looking attractive. All the highs have been sold off. The stock has not been able to sustain at any of its recent peaks. So these are not good signs. Since he is already in a loss, so I'd suggest just to hold on to it and utilize a recent bounce. If it gets somewhere close to 13.50, better to start offloading the positions.
Okay. All right. Neva from Chennai has got the next question. Ratan India Enterprises is the name of the counter. 72 is a buy price. Neva would like to know the fundamental view and whether the stock can bounce back from the current levels of 42 or thereabouts. Mahesh, coverage on the fundamentals. If so, would you buy? Would you hold on?
The fundamental, if you're looking on fundamentals, that some quite we are looking for if you're looking for a longer term horizon, I think a 75-80 level could be come. But yes, you need to hold more than 1 year. I think 1 to 2 quarter is not giving you full chance. So I think he can hold further. But yes, your horizon could be more than 12 months. So I think 80-85 level could become easily.
Okay, our next caller, Harish, is calling in from Visakhapatnam. Harish, a very good morning to you. How can we help you?
Good morning, madam.
Good morning. Go ahead with the query.
I'm having 800 shares for Reliance at the rate of 1231.
Okay.
Can I sell the shares?
Okay. Got your point, Harish. I believe you want a long-term view on this particular counter. Am I correct?
Yes.
Okay. I'll take this up with Mahesh. Mahesh, he's sitting.
But before you do that, I want to know, Harish, why do you want to sell the shares? Do you have an urgent need for money?
Because the RSI graph reached to 79%.
Say that again, sir.
RSI graph was at 79.
Oh, understood. So you think that it's in overbought zone. But Harish, when did you buy this stock?
Around 4 months back.
Okay, and you bought it for a perspective of less than 1 year?
Huh?
You bought it.
Pardon?
You bought it with the intention of holding for less than 1 year?
More than 1 year.
More than 1 year.
Long term.
Long term.
Okay, interesting. So
But it is again cumulative, na? That's why I am asking.
Okay, got your point, Harish. I'll take this up with Mahesh. Mahesh, in terms of the earnings, numbers were largely in line. In terms of the oil business, margins did contract, and this was led by the oil and gas business. In terms of Jio, well, the growth was on account of higher subscriber addition. Retail, they're going through a restructuring. What's the view like? He wants to know whether he should continue to hold or sell the shares right now. He's sitting on a profit of 1.6 lakh rupees, by the way.
Firstly, I'd like to giving disclaimer because we have recently given the Reliance industry advice to our clients on a before the exact result. So I think first giving disclaimer. If you're looking on a result basis, then if you see the results, that all the sectors are giving some participation in Reliance industry. And some the other things are giving some positive signal on the Reliance industry. So stock is performing good. But recently we have seen some rally from a lower level. So I think some consolidation can't deny on these level. That could be near with 1360 to 1420 level in some consolidation. But if you are looking for a longer term horizon, I think 1550 to 1575 level could become in 12-month horizon. So if your horizon is a longer term, then you can hold. From a shorter term perspective, you may see some consolidation. Consolidation can't be denied.
Okay. So since it's Reliance Industries we're talking about, I did market at the start as well. What's your view on this one, Gaurav? He has pointed to the RSI. And I don't know whether that makes a lot of sense to look at if you're buying for the long term. Of course, the Nifty 50 also RSI above 50, about 70, right? So therefore, one could argue that both the index as well as the stock are in overbought zone. But it is, if anything, making a comeback and playing catch up with the rest of the large cap space. So would you hold for higher levels?
See, first of all, I'll just explain the viewers what RSI indicates.
Yes.
RSI is an indication of relative strength index, whether at current levels the stock is having the strength and the momentum to continue, or it has started losing its momentum. RSI above 80 mark, as the viewer and the shareholder of this particular position said that it is into the overbought territory. He rightly mentioned that because trading somewhere around 80 odd levels is the overbought territory. Having said that, a stock or index can continue trading higher in an overbought territory for a much longer time as well. Stocks in long terms remain overbought for a very large period and continue their performance. So this should not be the sole indicator while considering whether we should book it or not. Now coming on to the levels front. Reliance Industries has achieved its short-term targets that we were expecting, that is 1435 today itself. So from a technical standpoint and from a medium-term perspective, it is better he should consider and take some profits off the table. Hold the remaining one for the next targets, which is probably close to 1500, 1550 odd levels in the coming 6 months.
Okay, so that's the view with regards to where charts are concerned for Reliance Industries. Okay, our next caller, Murli, is calling in from Bengaluru. Murli, a very good morning to you. How can we help you?
A very good morning to you, and thank you for taking up my query.
Our pleasure.
I got Indian Bank,
Okay.
1,000 shares at the rate of 580.63. 580.63.
Okay.
Currently, the results have come on Friday or Saturday. It is excellent results with the highest ever dividend.
Right.
Should I hold to avail the dividend, or if it goes up to cover my dividend plus my investment, should I sell, because public sector banks are always slow movers? And SBI has expressed the concern about credit growth, risk credit growth in 26-27 financial year,
Okay.
25-26 financial year.
Got it. Got it. Okay, got your query, Murli. I'll take this up with Mahesh. Mahesh, I hope you've understood his question. And, clubbing his question with the entire banking space, now that a lot of earnings have come out from the entire banking space, what's the view like?
I think from a Indian bank perspective, we are looking on the numbers. That numbers are very good from all parameters. I think from NPA perspective, if you are looking from a net interest margin perspective, numbers are good, pretty good. So I think he can hold further. And if you're looking on a dividend, that is 16.50 rupees. So from both perspective, if you are holding the stocks, so we can see some more journey. If you are looking at stock journey from a 2021, then it could be in near 140 level. From that level, we have seen some upside continues. So I think stock has a more potential from a result perspective. I think 650 level could be come in near term also. So he can hold further. Dividend is quite good, and stock bank is good, doing perfectly. From other banking perspective, if you're looking on a number basis financial, so I think the number are good. And we have seen yesterday also, we have seen SBI number, Kotak number. In Kotak, we have seen some number are not in line with expectation. Rest, if you are looking on a SBI number was good. But SBI is down due to concern of they want to raise the fund from QIP, FPO. So that is the concern in SBA. So stock is not moving higher. But yes, numbers are pretty from a SBA perspective also. We are optimistic for some more upside in banking. And if you're looking from a RBI perspective, RBI is giving more liquidity to banks, and all the things are positive for banking sector. But we have seen recently a lot of journey from a lower level in banking, in bank nifty also. So some consolidation could become in these level, and that could be a healthy for a longer term. So I think in the overall banking sector, if you're looking, I think we are all optimistic for more upside. But yes, some consolidation can be done on these levels.
All right, so that's the comprehensive view on Indian Bank as well as on the banking space. Indian Bank, by the way, doing particularly well on the back of its numbers that it reported over the weekend. Let's take the next question on Shakti Pumps. And Gaurav, this one's for you. And we've got Lokesh who's tuned in, who's asking for the next 6 months or less, whether you would buy at this current juncture and where would you place the target and stop loss?
Yeah, Shakti Pump is well placed at current levels. Currently, just trading above its 200-day exponential moving average mark, which is providing the needing support for the stock. So I would recommend that he should keep a closing stop loss at 800, wait for some time. That the time period is 6 months, as he is mentioning. So I think he should comfortably be in a position of 1,050 to 1,100 should be the levels that he should be eyeing at.
Okay. All right. So that's the view on Shakti Pumps. Hopefully that answers your question. We've got our next caller from Hyderabad. Govind is calling us. Also on the banking pack. And Govind, hi, good morning. How can we help you today?
Hi, Alex, sir. Good morning, sir. Good morning to all of you. Yeah, sir. Actually, regarding this Karur Vysya Bank, sir, I can add some more at this price, sir, for long-term prospects, 2 to 3 years, sir.
Okay. So you bought at levels...
I can invest at least another 5 lakhs, sir.
Understood.
I can plan.
Understood. So you bought at levels of 220 and you want to know whether you add more to your position. You've got quite a big holding as well, 2,000, right? So let me...
What is the fundamental reason?
Got it. Mahesh, you've already spoken about the banking space, so perhaps restricted to Karur Vysya Bank. Within that context, would you add more to this particular bank or something else?
No, he can add fundamentally if you're looking on a Karur Vysya, that is also good. If you're looking on the chart also, if you're looking on the numbers also, I think Karur Vysya is good. If your horizon is 1 year, we can see 250, 260 level. And if you want to add in lower level, that could be a nearby 200, 195 to 205 zone there. That could be a good idea for accumulate more on that level. From these level, we are not suggesting for add, but in lower, yes, if anyone get one nearby 195 to 205 zone, there could be add. From a 1 year perspective, 250 to 260 level could become.
Okay, so that's with regards to where Karur Vysya Bank stands. Our next question is on Inox Wind. Somik from Kolkata is writing in. He's bought 21 odd shares at 169 a piece, and he's looking at the stock from a longer term perspective. Should I add more at the current price is his question. I'll take this up with you, Gaurav, first, because I want to understand if the charts are attractive enough right now to average out. His buying price is at 169.
Yes, the stock is well placed. These are good attractive levels. He should consider averaging the stock. And if he is taking a view which is anywhere above 6 months, so he should look for targets that are close to 220, 230 levels are pretty much possible.
All right, Raju is calling us from Andhra Pradesh. Hi, Raju. How can we help you today? Good morning, Raju. Can you go ahead with your question?
Yes, I am having HFCL shares,
Right.
200,
Right.
at the rate of 150. So now 14,000 rupees I am on loss.
Right.
So what can I do now?
What is the time frame that you had in mind when you bought it, Raju? And did you buy it for the long term?
It's a long term only,
Uh-huh.
but since 6 months I am seeing that it's not coming up.
Right.
So I want to know what's the real scenario.
I got it. Okay. So you need to know whether to have patience and to hold on. Raju, I'm going to take your question with Mahesh. Mahesh, HFCL coverage, do you have, and would you hold on to this? What are the fundamentals looking like?
Not a specific coverage, but yes, on these level, we are not suggesting for sell HFCL. I think many clients have stuck in these stocks. So any if a stock is started some more upside, then we can see 110 to 125 level. But yes, currently stock can see some more consolidation. Breakout could be lead 110 to 125 level. There he should try to exit on the same. But yes, not advisable for accumulation on these areas. So if your horizon 12 months, you can hold. Wait some more time. We can see 110 to 125 level, I think.
Okay, so that's with regards to where HFCL stands. Our next query is from BV Nayak, and Major BV Nayak in fact, and he's holding 250 odd shares of Tata Motors and wants to know if we should add more at the current levels or not. He's a long-term investor and also wants to understand whether he should continue to hold his current holding or not. The stock is up 1.5% today as we speak. Mahesh, I'll come to you on this one. What's the view like for Tata Motors?
See, if you are looking on a auto sector, if you look on Tata Motors specific, P is quite reasonable and management is quite good. So numbers which we have seen that was not in line for a market expectation. That could be a reason for a lower consolidation. If any downside, if you are looking on nearby 610 to 630 range, that could be a good idea to add in a small tranches. But yes, in longer term perspective, some target could be a lower from an earlier one. So I think a 775, a 780 zone could be, if your horizon is a 1 year, then that target could be keep in mind.
Okay, so that's the view with regards to where Tata Motors stands, and Alex was mentioning earlier as well that JLR has now started exports back to US. Okay, so that's with regards to where Tata Motors stands. Our next caller, Dipendra, is calling in from Haryana. Dipendra, very good morning to you. How can we help you?
Yeah, good morning, ma'am. Good morning to the entire panel. My query is regarding the Tata Technologies shares. I bought 1,000 shares at 670.
Okay.
My old expectation between 3 to 6 months. What should I expect?
Okay, got your point, Dipendra. I'll take this up with Gaurav. Gaurav, what are the charts indicating for Tata Technologies?
First of all, it is quite a weak chart, but he has purchased at a good level. That is just about 7 odd rupees higher from where it is trading. So I would suggest him, first of all, he should maintain a closing stop loss at 600 for this stock, and he can expect somewhat target close to 750 in the time frame that he is looking for.
Okay. All right. Capital market players have been under a little bit of pressure. CDSL, one of them. I wonder what BSE is doing in trade today. We've got Kashyap calling us from Andhra Pradesh about BSE. He's bought at levels of 467. Wow. Kashyap, what an acquisition price, and when did you buy this?
Yeah, good morning, Mr.
Good
Alex.
morning.
Good morning.
Good morning.
Yeah, actually, I acquired this in 2023, March 9th. That day, I bought 55 shares of BSE. Now it is trading around 6,400, 460 rupees, right?
Yeah, yes.
Yeah, but my confusion, my question, my request for guidance is, BSE is going to announce bonus shares. So, what should I do? Can I accept and continue? My time frame is I can wait another 3 years.
Okay. So then why wouldn't you accept the bonus issues if you got 3-year time frame?
Yeah, that's why I am asking. Is it? I want to book. I want to sell and book the profit. And buy freshly, or can I continue accepting bonus shares? Stay another 3 years. That is the only confusion and my question, my guidance. I require your guidance.
Okay, so are you asking from the perspective of the tax angle, or is it on the fundamentals?
No. Okay, can I continue in this accepting bonus shares? Can I continue, or can I sell and book profit? And if his price is down, can I re-enter again?
Okay. I got your question.
Yes.
All right. Because after the bonus share, there'll be an adjustment of the price should you buy at that point. All right, I got your question. But do bear in mind that once a bonus is issued on a certain amount of your shares, you will have capital gains. On the rest of it, you will have capital losses. So the net off happens after that, right? So, but on the fundamentals, let me ask Mahesh, what do you make of this? Would you hold on? He's been rewarded handsomely for his patience.
Firstly, I like to congratulate to him for holding for such a long-term period. If you're looking on a fundamentals, I think stock is quite expensive from my perspective or a fundamental perspective. But yes, BSE kind of stock where horizon is more than 2 year, 3 year. That could be a much more potential to hold from these levels also. Some parts are profit booking. If you like to book, then you can book and re-enter in lower level if any chance given. But a downside could be limited as per stock pattern. Downside could be limited. So I think if your horizon is 2 to 3 years, then you can hold for that.
Yeah, just bear in mind, booking your capital gains at this juncture would not really make sense, because if you have the intention of buying it again, why would you do that? You would effectively have your fresh shares that are issued and you would start at scratch, and you would lose a certain amount of value on the stocks that you hold right now. So net, you would not really gain or lose anything. Let's take the next question. It's on... I believe it is on Airtel. Okay. So we've got a viewer, Abin, who's writing in from Mumbai, who's bought from when it was levels of 718, and he's continued to buy upwards. And he's wondering whether to book some profits at this juncture. I know that a lot of international investors are also looking at this very closely, Gaurav, and deploying. We spoke to somebody, Matt Orton, this morning as well, and Airtel is on his list. So assuming that you have more buying interest come through, would you hold on?
Airtel is on my buying list as well, and this is probably the best share one can have and a must hold in a portfolio. I suggest that he should continue to hold on to his position, because when we look at other telecom players, it is listed players. So it is Jio, which is in combination not solely available. Idea which we are not suggesting. So it narrows down to Bharti Airtel only. So I think it is a must to have.
All right. So that's the view on Bharti Airtel, and hopefully that answers your question, Abin. We have run out of time, unfortunately, on today's program. Mahesh as well as Gaurav, thanks so much for taking the time. Pleasure speaking with you. Of course, today's was a little bit of a curtailed session, but tomorrow, hopefully we'll have the entire program. And of course, if you missed out your question today, you can always log in the evening at 7 p.m. 7 p.m. Is that it? 7 p.m. All right. 7 p.m. is when you have the evening edition of Ask Profit. Up next is Know Your Company, so do stay tuned.
Gold Plus Clear Glass. Far ho ya near, sab kuch dikhe clear.
Apollo Tyres, now there's a buzz of a positive corporate development related to one of the related to its European operations or European business that could come in. Now this EU operations contribute nearly 30% to the consolidated top line of the company, and there's dealers are also indicating that there could be a potential positive broking note that could come in from a foreign broking firm. The last 1 month, if you see, the share prices of Genzol Engineering has fallen more than 58%.
Why are the rating firms calling the debt payments as default?
We have two credible credit rating agencies on March 4th coming and downgrading the stock to D.
Statements are consistently being proven wrong,
right,
and transactions are being taken place which are different from what they were originally pictured to be.
The company claimed it would roll out 6,400 electric vehicles. But what it has rolled out is a shocking scam. Funds meant for the project were funneled allegedly back to the promoters, the Junkie brothers. What did the money buy? Not EVs, of course, but a lavish flat in Gurgaon's luxurious DLF Carmelias.
To India specifically, I really think India has a fascinating opportunity because in a fracturing world, everyone wants to be friends with India. We're all trying to make new friends a little bit, right? So we're all trying to think about the remapping of the global trading system. For sure, India is on the top of everyone's list, I would think.
Do you really know the company you invest in? What is the real picture behind presentations and claims? Is the outlook as rosy as the company claims? Hello and welcome. We are in the thick of earnings, and in between all of those, we're going to try to squeeze in SBFC Finance. Now it's interesting because it's an NBFC firstly. It trades at around 3 times price to book. And when it comes to the ROA and the credit cost, it's held up very, very well. Even in terms of growth guidance, there's been no concern as of now. And that's why in this cycle, this one becomes very interesting to understand. Let's first understand as to what I want to really look for when I'm trying to analyze this one. Can the credit cost and asset quality sustain? Currently, NBFCs are seeing pressure, a lot of them, with regard to asset quality. This one is not seeing too much pressure. Even in terms of credit cost, you're not seeing too much of that impact coming on the P&L, and therefore, can that sustain? Because that will lead to likely better growth outcomes. And that's probably my second point here, to try and understand whether there's a downside risk to that 5 to 7% QOQ growth guidance. So very, very strong growth guidance. Can that really sustain is my second question. My third question is with regard to increase in leverage, and why I say this is because the capital adequacy of SBFC is at 35%, which means that it has a sizable amount of equity within that capital base that it has and that it disburses from. And therefore, it has good bandwidth to take on borrowings onto its balance sheet and reduce its capital adequacy to grow. So they will now likely start using more and more of borrowing, which they've already been doing. But as they do that, their capital adequacy will come down, but their interest cost will go up, and therefore their margins will come down. And therefore, in such businesses, better to look at spread than margins. But as the margins squeeze, does the ROA, which is the return on assets, which is a measure of profitability, does that also come down? So that is the other piece that I want to look at. And last off, cost efficiencies. Its cost to income has come down from 50% to 40%. And therefore, what you're seeing is a better profitability, which is coming through. Can that continue, and to what extent? So we'll try and bring out all of these points when we have a chat with the management. But that's the first piece of it, what I want to know. Now I'll come to the fact as to what the company does, because that's what we do on KYC. We try and break this company down. We'll first start off with what the company does. It was incorporated in January of 2008. It was incorporated as MEP Finserv Private Limited, renamed to Small Business Fincred India Private Limited on the 3rd of July 2017, and then called SBFC Finance Private Limited from the 24th of October 2019. It converted into a public limited company on 30th of September 2022, and thereafter listed on exchanges on the 16th of August 2023. It raised around 1,000 crore worth of capital, and it is co-promoted by Clermont Group and Upwood Group. Now, in terms of product, it includes MSME loans, secured MSME loans, and gold loans. So loan against gold and secured MSME. Understanding is 100% of the book is secured. We'll obviously get better perspective as to what the risk could be in case of default. How long does it take for them to liquidate some of these assets if at all there is a default? It also offers, and this is where it becomes interesting, loan management services to third-party financial institutions, particularly